Hey, what's up, guys? Houston here. Look, if you're trying to get an SBA loan, then there's a secret credit score you need to know about. That's right, a secret credit score. Most people don't even know when they're trying to get an SBA loan, especially if you're trying to get $50,000 or $100,000. The thing about it with SBA, all right, most of the time SBA will accept if you don't have the best credit, say that you have below a 620 credit score, they'll still work with you. However, in terms of when you're trying to get an SBA loan, like $50,000, $100,000 and stuff like that for your business, especially if it's an existing business, there's a secret credit score that they're looking at, all right? So the secret credit score is called the FICO SBSS. And so what that SBSS means is a small business scoring system, all right? It's a small business scoring system. Now, here's the thing about it with the small business scoring system is that many people are not aware that this here score is going to determine the loan as well as the line of credit and the amounts they give. That's the reason when you go to SBA and they give you this list of lenders, this recommended list of lenders and everything, the reason they give you that is because these here lenders, and there's 7,500 lenders, all right, that actually use this scoring. And the thing about it, the reason you don't know about it because they don't have the right to disclose. That's right, they don't have to disclose this here scoring system. So that's the messed up part about it. But what it consists of, the score goes from 0 to 300, all right? Now, here's the thing about it. The higher the score, the lower the risk, all right? The higher the score, the lower the risk. Now, here's how it's done. So not only will they pull your personal credit, okay, but they also pull your business credit as well, all right? So usually when you're trying to get an SBA loan, usually they will pull your Experian business, okay? However, remember I told you guys that you have the small business financial exchange, okay? So the small business financial exchange information also correlates with this FICO small business scoring system number as well. That's the reason that I was telling you guys is certain institutions that you should have as your primary bank. I'm not playing with you guys. When I'm telling this stuff, it's not that I'm just telling you stuff. I'm actually looking at the data, studying the data, finding out which banks use these scorings and stuff like that. So that's the reason, like, you may find, like when you try to go get a loan. Remember I told you guys that, say that you go to the bank, okay? And so when you go to the bank, what ends up happening, all right, and you try to get a loan, right? And I told you it's too much red tape. Well, that too much red tape is because of these type of scoring systems. These are hidden scoring systems. And there's more than that. And I'm going to talk about those scoring systems as well. But the thing about it, you don't know that these scoring systems even exist, okay? And you wonder like, well, how come they wouldn't give me the loan? And so they won't give you an explanation. And the reason is banks won't give you an explanation or whatever, again, because they're not entitled to give you an explanation, right? Now, some of them may have the courtesy, but like most bank lenders, they don't understand their own underwriting. You go to a bank for a loan or whatever, and you get turned down, you ask them what happened, they'll tell you they don't know. 80 to 90% of banks do not understand their own scoring system. They don't understand their own underwriting. So when you see with a business bank manager or whatever, the thing about it, especially in the business division, you trying to get a loan or whatever, a lot of times they don't understand the underwritings of their bank, right? So that's something that you need to know. Now, here's the thing about it. I also was telling you guys about certain net 30s. Well, the thing about it, like I said, I'm not a big proponent of buying a whole bunch of net 30s. But the reason I tell you all to invest in certain net 30s, because that payment history is going to be shared. And that data is going to be shared about your business. So like Many of you guys may have had net 30s and you never paid the bill. Or you may have had like a business loan or a business line of credit and stuff like that, and you never paid the bill. You just dissolved the company. That counted against you. Like with this PPP loan and the EIDL, especially the EIDL loan, okay? So a lot of people figure like, okay, SBA gave me $100,000 on this EIDL loan, but I don't want to pay it back. So what people were doing, they were dissolving their companies. Well, here's the thing about it. When you dissolve your company, you actually disqualify yourself for other SBA loans. Not only that, because you dissolve the company with an outstanding debt, what ends up happening, it goes into these type of hidden systems. So when you try to get more loans, more lines of credit, and the institutions that use these systems look at this, then you like wonder why you can't get a loan or a line of credit with your business. Is because of this. That's the reason I was looking at it, and these people, oh yeah, you can just dissolve your company and you don't have to pay the EIDL. Look, you're screwing yourself when you do that, and people are not being transparent about it. The reason they're not being transparent is because they do not know. They don't know what they're actually telling you when they tell you, oh, just dissolve the company and don't pay it back. They're not realizing that you're going into a credit scoring database that's going to come up, and you're going to try to start up another business to go get more lending. And some of these lenders you're going to approach, they're going to see that and they're going to say, nope. So you're going to really screw yourself. So that's the reason I tell you, even if you have to continue making the minimum in the business or negotiate them reducing the amount of loan that you owe or whatever, then I would try to do something like that. But for us, dissolving the company just not to pay back the lender or whatever, you're really hurting your situation. Because people are always looking for these loans and lines of credit with EIN only. Well, again, even though the bank themselves may not recover from that, because you did not pay that debt back, you're going into a system. All right, your business goes into a system. This data is picked up, and like I said, with this here scoring system, it actually is going to pull personal credit as well as business credit. So the things about it, they're going to look at the age of the business when trying to qualify you. Payment history. Again, this is what affects you. They're going to also look at your assets, number of employees, the revenue that's coming into the business. They're looking at all of this, okay? So for those of you that think that, hey, oh, I got an EIDL loan, but I didn't pay it back or whatever, and all right, keep thinking that. But if you have any other questions about business credit funding, personal credit funding, removing negative items off of the credit, click the link in the description. Thank you.